The 48-hour debacle of Silicon Valley Bank. The Silicon Valley Bank, also known as SVB, was one of the largest banks in the United States and was known for specializing in financing startup companies and ventures-backed firms had made its downfall in less than 2 days. What was the cause of it? Is there still a chance that SVB will rise again? Let us try to find out in this video for a short period of time. If you are interested in these topics, simply click the like button and subscribe for more. History of Silicon Valley Bank. Bill Biggerstaff and Robert Medeiros came up with the idea of Silicon Valley Bank during a poker game. The two, along with the bank's CEO, Roger Smith, opened first branch in San Jose, California in 1983. It went public in 1988 and relocated to Menlo Park in 1989 to strengthen its position in the venture capital world. Silicon Valley Bank grew to become one of the largest commercial banks in the United States. It nearly tripled in size between 2019 and 2022, rising from the 34th largest bank to the 16th largest with $209 billion in assets at the end of the year 2022. SVB has emerged as a key player in the startup ecosystem, providing funding and financial services to a number of successful startups such as Tesla, Uber, and LinkedIn. It had been in operation for 40 years until March 2023. Bank failures like this have occurred before, with over 550 banks closing between 2001 and the beginning of 2023. This one, however, was particularly noteworthy. Not only did it occur at a time when many Americans were already anticipating a recession, but it was also the largest bank failure since Washington Mutual went bankrupt during the 2008 financial crisis. The question that we have all been asking is, why did it collapse? Behind its downfall. To help you understand what went wrong with Silicon Valley Bank, we will go over the bank's history, the events that led up to the collapse, and what it means for depositors, investors, and the economy in general. Long-term debt. Deposits and assets increased significantly when Silicon Valley Bank experienced massive growth between 2019 and 2022. While some of those deposits were held in cash, the vast majority were used to purchase treasury bonds and other long-term debts. These investments typically provide low returns while posing low risk. Investments at risk. However, Silicon Valley Bank's bonds became riskier investments as interest rates rose in response to high inflation. Silicon Valley Bank's bonds lost value as investors were able to purchase them at higher interest rates. Bank run. Silicon Valley Bank, despite being the country's 16th largest bank, did not have enough assets to be subject to the additional rules and oversight. If the threshold had not been changed, SVB would have been more closely monitored. People were concerned when the bank announced its $1.75 billion capital raise on March 8, 2023. The news quickly spread on social media platforms such as Twitter and WhatsApp, causing widespread concern that the bank lacked sufficient funds. Customers started withdrawing money in waves. SVB's stock dropped 60% on March 9 after the company announced a capital raise. Lost profits. To accommodate these large withdrawals, Silicon Valley Bank decided to sell some of its investments, but the sales were a loss. SVB lost $1.8 billion, indicating the start of the bank's demise. The inability of SVB to meet its financial obligations was caused by the liquidity crisis. Impacts of the collapse. Who is affected? The Federal Deposit Insurance Corporation, or FDIC, insures bank deposits up to $250,000 per depositor and bank for each account category. In other words, if you had $250,000 in your Silicon Valley Bank account, you would get a full refund. Unfortunately, because the majority of the accounts at Silicon Valley Bank had deposits of more than $250,000, the majority of the funds were uninsured. Account holders would typically lose any funds above that threshold. Stockholders and investors in SVB, on the other hand, will not be so lucky. While the FDIC can protect depositors from losses, it cannot protect shareholders or holders of unsecured debt. Individuals and institutions that own SVB Financial Group stock may not be eligible for a refund. The technology sector is the most concerned right now, as it has been hit by recessionary conditions, forcing larger technological companies to lay off workers. One of their most ardent supporters has now died. Startup companies may face funding challenges because management teams at other banks are hesitant to take on the risk of an investment. You might be wondering what the Federal Reserve is doing right now. Here is what you need to know. The government will not bail out Silicon Valley Bank. It will remain bankrupt, with the remaining assets distributed to creditors. A buyer can bring it back to life if another bank buys it. In addition to its headquarters in Santa Clara, SVB has offices throughout the United States and in key international markets, including the United Kingdom, China, and Israel. The bank is known for its culture and has been recognized as one of the best places to work in the Bay Area and in the financial services industry more broadly. The SVB, in addition, has a strong reputation for its expertise in the technological and life sciences industries and has been a key player in the growth and success of many notable companies, including Apple, Google, and Amazon. The bank has also played a significant role in the development of the venture capital industry, providing financing and support to numerous early-stage startups. In March 2021, Silicon Valley Bank (SVB) experienced a 48-hour outage that left many of its customers unable to access their accounts or conduct transactions. The incident was a major setback for the bank, which is known for its expertise in the technology industry. The outage began on March 3, when many SVB customers started reporting issues accessing their accounts and performing transactions. The bank acknowledged the issue and initially stated that it was due to a technical glitch that was being addressed. However, as the outage continued in the second day, SVB began to provide more details on the cause of the problem. According to SVB, the outage was caused by a confluence of events, including a hardware failure and issues with the bank's internal systems and processes. The bank stated that it was working around the clock to fix the issue and restore full access to its services, but the outage persisted for a total of 48 hours, causing significant disruption for many SVB's clients. The impact of the outage was felt particularly acutely by technology startups. With many businesses operating remotely due to COVID-19 pandemic, the inability to access banking services could have a significant impact on the ability to conduct day-to-day operations and manage cash flows. And that concludes this video. Do you still want more of them? Then don't forget to write the acronym SVB in the comment section below. You may also add your thoughts and insights about this video. Also, don't forget to like this video and subscribe for more. Thank you for watching, and we'll see you on our next video.